All right, everyone, welcome back to 7-Minute Options. So today we're going to talk about delta and why delta is so important and why it's so widely used. So delta is kind of like the universal language of options, right? Everyone in the options world defines their positions in terms of delta. You know, which delta do you go to? How many deltas are you short? How many deltas are you long, etc. And so delta, here you can see it's in this column right here. Delta is roughly defined as how much your option changes if the underlying changes by $1. So in this case, let's look at GM, right? Today, GM is trading for 55.44. And you can see the orange line there. It's right around 55. And let's say you want to buy the $50 strike option, right? So let's buy the $50 strike. And you can see right now, let's say you get this for $6. I'm not suggesting you do this, but as an example, you buy this for $6, right? If GM goes up by $1 from 55 to 56, then this option is going to increase in value by 82 cents because that's the delta. If the option goes, if the stock goes down by $1, so if GM goes from 55 down to 54, this option would lose, like in this case, 83 cents, right? The delta just changed on me there. But that's the idea of delta. Now, this is highly correlated with the probability, right? And you can kind of see that if I go way down, right? Let's say I want to buy, if somebody wants to buy the $20 strike. I mean, think about that, right? The only way this option would expire worthless on June 18th is if GM would tank below $20, right? That GM would have to lose more than half of its value between now and June 18th. That's the next 30 days. It's very unlikely. You can see here the out of the money percentage there is 3%. So there is a 97% chance that this is going to expire in the money. So it is going to be worth something at expiration. And when it's that high, you can see the delta is almost 100. Like it's almost like if the stock goes up by $1, this goes up by 99 cents, right? As the stock moves up by 1, this moves up by 1. So this essentially is just like buying 100 shares of the stock, right? Because if I buy 100 shares of the stock and the stock moves up by $1, I make $100. If I buy this option and the stock moves up by $1, I make 99 cents. So it's roughly the same. That's why the delta is almost perfectly 100. And of course, the opposite is true, right? Imagine if you want to buy this stock, this option here, the $80 strike. Well, like the chances of GM reaching $80 a share in the next 30 days is extremely unlikely. Right now, the out of the money percentage is listed as 99. I mean, it's mathematically impossible, right? And that's why the delta is only 1 penny, right? Think about that. If you buy this option and you can buy it for 3 cents, I'm not suggesting that you do that, but you buy that option, like, yay, I have an $80 call option. That's fantastic. But if between now and tomorrow, say GM goes up by $1, this option would only go up by 1 penny. Keep in mind, when you buy an option, it's not free to buy an option. There's transaction costs. And also there's time decay that's working against you, right? Because as this goes closer and closer to a 100% chance of not being in the money, or as closer and closer you get to expiration and it becomes more and more obvious that this is going to be worthless, it is going to be worthless, right? So for example, you can see here, this one, the $90 strike, with 30 days to go, you know, the market is saying, look, this is worthless. I mean, the bid ask is between a penny and zero. I mean, like it's essentially worthless at that point. So if you buy this option, even if GM goes from $50, like going back to the 80 strike here, you buy this option, even if GM goes from like $50 to $70 a share, a huge thing, you know what? There's still a chance this is going to expire out of the money. You can make some good money on that call option if GM goes from 50 to 70, but even GM going from 50 to 70 is highly unlikely. Look at 70. There's a 98% chance even 70, right, won't be in the money. So what does this have to do with delta? Well, delta, if you look at it, well, if something that's really unlikely is like 0 or 1 delta, and something that is very, very highly likely is like a 99 delta, then isn't delta kind of like the probability? And the answer is, well, yes, it is. Delta is very, very closely linked to the probability. If I switch this to in the money, ITM, right, you can kind of see that it very closely matches up with delta, right? So a 97% ITM, 98 delta. 95 ITM, 97 delta. Moving down, 85 ITM, 87 delta. 34 ITM, 38 delta. They're not identical, but they're very, very close. And they're actually close enough where you can use them kind of interchangeably. I mean, this is not exact science with the numbers, right? This is just a mathematical formula that approximates the probability based on the volatility and blah, 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 blah. It's not, I mean, this is not a prophecy. And, you know, this is probably within like the margin of error. So you can use them interchangeably. So now that you know that delta is highly related to the probability of an event happening, then you don't really need to have this extra column for ITM. And so you can use it for something else. Or you can even remove that column and make your screen less cluttered. And that's the closing bell. Awesome. All right, it was a bit of a bloody day today, but that's okay. We'll survive. All right, so looking at this, another thing to keep in mind is that when you're looking at options that are at the money, like this option, right? It's a 55 strike. Remember, the stock is at 55.53, which so the stock is a little bit above this, but this is as close as we can get to being at the money for this particular stock. The delta should be 50, right? And if the stock would be at exactly 55.00, this would be 50 delta, and this would be 50 delta. The reason why this is a little bit higher is because, well, there's a better than 50% chance that this 55 strike is going to be in the money because, well, the stock is already a little bit above 55. And so that's delta in a nutshell. All right, starting off at 50 where you're in the money, going up to 100%, and going down to 0. All right, that's 7 minutes. Thanks very much.